Hi everyone, welcome at Wavect. Today I have Paterson here, who is the CEO of Margin Syndicate and is a Forex and crypto trader. And today, as you might guess, we are talking about how to get started with trading in crypto. And thank you, Stephen, for being here. It's a pleasure talking with you. And starting out, I would love to hear what are you passionate about, what does our everyday look like for you? And please also feel free to add some things I probably just didn't say yet.
Yeah, so what am I passionate about? I suppose what I'm passionate about is meritocracy. And with capital markets at the moment, I don't think there's true meritocracy. Because I think since the time of great venture capital about 100 years ago, I think the money that you have determines your access to markets. And I think that's kind of controlled access. And I think the closer you've been to the Fed to a certain extent, that the better off you've kind of been. Yeah. So that's one thing. The other thing I'm passionate about is democratizing access to capital. And perhaps that seems a bit misnomer in terms of the crypto markets, because the crypto markets are a real true market, right? They're not a friendly place. It's not a friendly place, particularly at the moment, right? So us kind of saying, it's a good thing. It's a good thing and a bad thing. It's a true market. So that kind of coincides with the idea of meritocracy. Like, if you work hard, theoretically internal to Web3 crypto, etc., which is what all the Web3 guys are saying now in a bear market we will need to build. Maybe we do, because you can do your best work then. And then that's more likely to bear fruit in the context of the crypto markets. So that's kind of what I'm interested in. I'm interested in democratizing access based on merit.
Awesome.
What does a day look like at the moment? I mean, we're running the fund, so I guess that's compounding. Marcus often comes up with some ideas overnight, like because he'll change something in trading view, and you'll see a different kind of aspect, and say, "Hey, we can do this," and I say, "Yeah, that's a great idea." We run stats, lots and lots of spreadsheets. Yeah, so we're spreadsheet monkeys. We don't trade much. We just play with spreadsheets. Yeah. So yeah, there's that, and there's reaching out to people. There's talking to people, like half of it about relationships to a certain extent. And then I spend at least an hour or two, like taking down footers on LinkedIn, like talking about. I don't know what these guys are up to, man. They're like absolutely talking complete rubbish. They're making the same kind of statements over and over again. You're like, just wow, like, why are you doing this? But I mean, it's all coming apart, isn't it? Right? Like that whole kind of traditional finance things looking a little bit ropey at the moment. Yes, yeah, so it's not like, it's not like we're worse off, right? So yeah, so it's communicating, it's parsing stuff, it's trying to find additional information, it's building systems, it's discovering. Yeah, that's the nice thing. It's like at least 20% of it is discovery. How active these things are. How active everything is, like for us internal to these markets. It really is a full-time job. But I mean, that's cool, because then you need to kind of actualize that information and then put that out and make that useful. So often that's we're the first people doing that stuff and kind of actualizing these ideas and making them actionable. So I like that. Yeah.
Super interesting. So based on that, I would be curious. We got to know each other based on crypto trading, right? Because I saw your post and engaged with them. On your profile, I see that you are coming from the Forex background, FX trader. So where is basically your focus right now, just out of curiosity? What's your...
At the moment, it's an incredibly difficult time to join trading. Like, how do you make money in this market, right? So in terms of my focus at the moment is purely on quantitative stuff. So I think, you know, when people come to trading, they think, oh, there's a magic bullet, and they look for that magic bullet. And, you know, they'll jump between strategies. You know, consider correlation, causation, all these things. You know, like, am I doing it right? You know, so at best, we just try to think of things in terms of a quantum, how likely it is. So yeah, that's kind of, it's kind of what's changed, and how we're kind of thinking is we're thinking in terms of quantum and probabilities as opposed to absolutes.
Awesome. Yeah, trading is all about probabilities, right? You can't predict for sure what's going to happen. So it's always just taking into account what's happening in the market, what's actually, if any technical indicators are triggered, and so on, right? So since you're really deep into that, I think it would be interesting to start out with some key, I would say, KPIs or key indicators on how you actually recognize a good trader. You know, what makes a good trader. And even though we might have very difficult markets right now, and it always, for sure, it depends on the market. If we have a bull one, it's very
Easy
easy.
mode.
Yeah.
I wish. Yeah.
Yeah, but would love to yeah, know what you're thinking about that.
A good trader manages his risk. Yeah, it's as simple as that. Yeah, like everyone, you know, wants to learn how to trade and triggers and everything else. It's so, you know, you'd save yourself so much pain if you understood risk. So much pain. Yeah, like particularly with futures markets, and then signals groups at the moment, they will deliberately attempt to mislead you on. So if you don't, if a guy completely understands risk and he's talking in risk reward and ROE, then that for me, because he can take 1,000 licks and he can get hammered so many different times, but he can still come back. Yeah, rather than a pump and dump guy who rolls the dice and does well. So for me, that's what a good trader does. He kind of controls his risk. Because you can always come back. You know, we've had situations where we outsourced part of our trading to a guy and he didn't really care about the fund, and he took a 50% down in a month. And then, you know, because we
That's pain. What?
He's a terrible trader. I won't tell you his name. Yeah. But yeah, we got it back because it was a bull market the next month, and it was easy enough to do that, you know. So yeah, that you discipline, yeah, and someone who's kind of not emotional about his trading. I think that's the big thing, you know. Yeah, like it can't be about your wins and your losses. It's just a thing, right? Like the profit is an abstract. It's about getting the technique right and everything kind of in play, and just, you know, getting your entry and exits correct. That should be about that as opposed to the profits. That's a better way to think about it, because it makes it much more manageable, right? Because like oftentimes you can have a series of losses and then you give up, and then that's when you shouldn't give up. But I mean, if your loss isn't that big that it makes you want to give up, you know, if it's kind of managed, then all those things are better for you in terms of your terminal outcome.
Definitely. So no wage trading. Is that what you're going?
No way.
Are you saying?
Like, step away. Go for a walk. Yeah. No way. Yeah.
Yeah.
That's absolutely not.
Yeah. 100% agree that I'm not a professional trader by far. But what I already learned is definitely risk management is one of the top most important abilities you need to have in that space, right?
Yeah, people try and mislead you, man. Like yeah, they give you stuff like additive profit, and just the way statistics are presented to you by so many signal groups. Yeah, like they don't tell you your ROE is based on the size of your fill. They're trying to mislead you. Yeah. So if you're going to rely on signals to initially trade, you need to understand that stuff at least, because no one's going to look after you from that perspective, right?
Yeah,
Just looking for
yeah,
most signals groups aren't necessarily profitable, or they're less profitable. They're all trying to post high profits, and they're posted in such a way that it will maximize the look. Yeah, but it might be unprofitable, because you only got a quarter of your fill, and then you got to fulfill on your stop losses. So I mean, yeah,
that's even worse. Looking back into 2021, with all the shitcoins, right, where signal groups basically promoted shitcoins, and basically it was just exit liquidity for them, or for all the influencers, at that time, at least, it was a huge thing. Not sure if you have been into shitcoin trading as well, like the really small caps.
Yeah. I mean, it's the poor liquidity works both ways, right? Yeah, but I mean, when there's no buyers, there's no buyers. It just goes straight down. Yeah. I mean, that's tough. Like trading off Twitter, right? Like trading off Twitter kind of gives you what you can be looking at. It's never a trade trigger, especially those big guys like Carl and those guys. Like, no way. Yeah, especially if you want alpha, then like maybe the guys like 100, 200, 500 followers, right? By the time it gets to those top alphas, those top accounts, they're just looking for exit liquidity, right?
Yeah,
100%. But
definitely.
yeah, and then I just didn't. And I don't think there's such a thing as investing in. Like, maybe there is, like people talking about, stuff like DAG, and thinking you don't know what's going to happen, man. You don't know what's going to happen, right? Like, it's a cool technology, but we don't know about the adoption. So yeah, a big thing for me, illiquidity works both ways, right? It can protect you, because like if you don't have sellers, if there's no one to sell, then you can control the markets to a certain extent. So I think there's a project called Yield Nodes at the moment. I think you might have heard of it.
No.
That they provide proof of stake solutions, so they basically give you like 1 or 2% a week as yield, but they control the market. And that's that. So to a certain extent, like, that's great, but then if you want to exit the market, then that's a problem. Mm-hmm. So that's kind of why, as a hedge fund, we just want to be able to exit. Mm-hmm.
Yeah,
we want to be able to exit. So that's why more kind of margin, more kind of futures type of focus. But futures are hard though. Like, it's the whole thing about sizing. There's funding. There's fees. It's it's, especially in this market, it's non-trending. I think probably the way to make money in this market is grid trading.
sorry, what was the last one?
Grid trading.
Grid trading.
Yeah. So that.
Could you explain it for the audience, probably, because I'm sure many of the people watching this might not know what grid trading is.
Yeah, sure. So grid trading is basically like DCA. So it's like dollar cost averaging. So you'll have a lattice of buys and sells on a chart, which will have a low and a high, and they can be arranged in various ways conceptually. So you can go for arithmetic, which means you have more of a denser grid, and that means you make more money from it just doing this. Or you can have geometric, which means if it goes all the way to the top, you're selling less on the way up, so you take more profit. So basically, when markets are super boring like they are at the moment, and they're like 1% movement, then you can make money from the movement. That's the essential thing. If you're not sure, then it's building your orders. It's giving you a fixed order, and it's easier for you to exit. Yeah. So if you're not sure about trading yet, that's one way you can make money. Yeah. It's just I think KuCoin have something. Pinex probably have the best grids, and they do brokerage stuff with Binance and maybe Wobi. Binance now have grid trading, don't they? They've got futures grids. So yeah, I mean, I'd go for grid trading. It's probably the easiest thing to do, because awesome. it gives you that kind of protection. like spot trading at the moment. Yeah, I mean, like you can still get pumps, but I mean, it's tough. It's tough. If you've got bags now, what do you do? I mean, you can put them in a grid. You can send them across to, and then just, yeah. So you can stack more. So you can have an inverse grid, so it buys and sells on the way down. Or you can try and slowly exit. You can leverage them even, man. Even better.
100x. Let's go. I think with the current situation, with all those central exchanges doomed to be insolvent now, I think many people tend to actually have their funds on a cold wallet. But I definitely agree that could be super interesting, especially as you said, KuCoin has a lot of different bots to add them as well. It's definitely a great idea. So to recap, basically, we already have some key factors which make good traders, and we already talked a little bit about the mistakes. But do you have 2 or 3 things possibly which you would say to the audience, please don't make that mistake as well? Don't, for example, do wage trading or whatsoever. Do you have any of these kind of?
Yeah, just keep your risk standard. Even if you think that the project is the best project ever, always maintain your size. Yeah. Even if you think it's absolutely awesome, it's going to change the world, always maintain your size, because particularly in the context of crypto, you don't know who half the people are. You don't know what's going to happen. Like look at something like Strong Block. Yeah, have you seen Strong? Like
No.
Strong was a node project internal, and it was, yeah, just if you look at their chart, they were like selling for 3 or 4
I
grand.
can imagine.
Yeah, and people were buying these nodes thinking it's going to pay out for the rest of their lives, passive income. It's the dream. And this guy was talking it up, saying they got all these partnerships. They said, you just don't know. He may be telling the truth. He may not be telling the truth, right? So just always maintain your size. And then just always be open, be humble. Yeah, like always try and listen to people, and then understand and try and remove your emotions as much as possible. Like try not to be an emotional trader. Like that's yeah, like no revenge. I mean, how's that going to help you? Like the market doesn't owe you anything, right? It does not owe you anything. It's like the worst headmistress ever. She doesn't care whether or not, yeah, it just doesn't care, so you need to be the same. You can't care that much, you need to kind of pull yourself away.
Markets are ice cold, definitely.
Yeah, I see. I mean, like, just think of who's left at the moment, man. It's all a bunch of sharks.
Yeah, as you said, I think managing the size already helps with being non-emotional, right? If you're already all in always, then it's gonna be really tough to be cool when it goes down or up, whatever.
Yeah, I mean, look, if you're all in now, if you're a bag holder, I mean, you just do something about it, right? Just look for
spot trading. Yeah.
There's spot trading, there's staking, there's stuff you can do, So if it's bothering you, just try and be active and try and look for options. There's yield farming. Just understand how yield farming works, and the whole thing about impermanent loss, and just understand how that works. Start with staking. Yeah, I mean, you can always ameliorate your loss. I don't think this will go on forever. I think we're getting ready for some hyperinflation, in which case all your bags will pump. Yeah, so it'll probably be the end of Western civilization, though. But yeah, we'll see. Really
some doomsday scenarios here. Okay.
yeah. Sorry. Yeah.
No. All good. I think it's not gonna end well. So let's see.
But yeah. I mean, it'll end, right? They kind of had this idea with Bitcoin in the last financial crisis, and they kind of foresaw this issue, right? Because there'll be terminal money supply. It's the whole thing about the singularity, and we're getting closer and closer to the point of singularity, fiat singularity. So yeah, I mean, maybe it'll happen, maybe it won't. Again, we're managing a risk, but I mean, you'd be crazy not to have some crypto exposure,
Yeah,
right?
yeah. That's a risk as
100%
well.
crazy. It's a huge risk. Like, imagine if there's a pivot to the stuff, you know, like Martin Wolf and all those guys at FT, they're really kind of picking up. And what's the latest headline? You know, crypto is not the alternative monetary system that we need. So, you know, it's quite different. I mean, they were calling it a complete scam 2 or 3 years ago. Now it's not the alternate. So you wait. Yeah, I think it'll be okay. Just take it day by day. I mean, you know, like there's some really awesome traders, Saka, etc. They're 50% down right now. You know, so you didn't do anything wrong. Just try and learn from it, and then, you know, if you're sitting on bags, just try and do something with it. You know, I don't think Binance is going under. I don't think, you know, FTX are going under. So
Oh.
yeah, just get a little better. You know, just get a little better every day. That's all you can do. Don't put too much pressure on yourself.
Yeah, that baby steps count too, right? Just improve 1% at a time, and you will get where you want to be. Just be patient.
Yeah, I mean, it's much harder to make money right now. Much harder. Yeah. So like, a lot of people are trying to make money right now, and that's going to lead to frustration. It's going to lead to mistakes. Which, if you're being you know, opportunistic, you can be opportunistic about people's mistakes. Yeah. But I mean, right, just understanding right now, there's less velocity in the market. There's less money to be made. That's the truth.
Yeah, for predictable trading in some sense, you always, or usually, I think you need to have some kind of a trend, right? If you don't really have a trend, then it's, as I said, super hard to actually, you know, you most of the time either need to go short or long. For sure, in traditional markets, we have something called where you also can bet on stagnating markets and something like that. But in crypto,
move stuff.
yeah, much harder.
Yeah, you have those markets in FTX, right? So you have like BTC Move, so you can short it. Yeah, other things you're interested in CFDs. I mean, CFDs are good because there's minimal upside, minimal downside. You can't get wrecked on them. Yeah. So that's
on CFDs. Oh, you mean
contracts
because because you don't need to add for the money if you're a liquidator. What do you mean?
Well, I'm kind of thinking of CFDs as puts and calls. Yeah. So how do you see CFDs? Yeah, I mean,
everything I know from CFDs is that the actual brokers are usually, for sure, you should always play on the larger time frames, right? But many starters in trading, especially me, were on the lower time frames. And what I got to know is that those brokers basically sometimes, in how to say that I don't get in trouble, seem to manipulate the minor time frames to some extent so that some people are liquidated.
Yeah, you get heat maps, right? Like Robinhood were doing that for a while, right? That's why everyone went off Robinhood, because we're selling those feeds to hedge funds, you know. Yeah, the exchanges. I mean, everyone thinks about FTX. what do they do? Just like mind your leverage. It's like, at the moment you need to be on the low time frames. There's no two ways about it, you know. But I mean, you know, the way that we're finding stuff that works on the lower time frames is looking at 2 years of data with 2 million trades. Yeah. So I mean, unless you kind of have that kind of data, it's very difficult to spot things that'll make money. And then you need minimum distance. So yeah, that's why I'm advocating grid trading, man, because even if you're high leverage and you're taking like a 1% move, then you're paying a lot of money in fees. So, you know, it's not like if your stop loss is 0.5 and your take profit is 0.5, it's not the same thing. You need like 1% to make money. But the longer route it can go, the easier it is. At the moment, we don't have that, you know, we don't have that kind of movement. Yeah. So you just need difficult. To be very happy with the setup, and there needs to be A++ setups.
Yeah, 100% agree. Yeah, basically, talking about that, I know it's super hard right now, but how would you actually say, should people start, or if they want to get into the game? What kind of maybe resources or what kind of trading strategies do you think could be suitable for beginners? What kind of mindset exercises maybe or principles? I don't know.
Okay, well, to learn about risk management, I mean, there's baby pips. So that's a good free resource. Like Finance Academy has got a lot of different resources on it, and that's all kind of free. If you can, like, you can start with spot trading. You do get some pumps, and you get pumps at various times of the day. So just get familiar with the order types when you're doing that, like commit to markets, see what effect that has on your P&L. So start with spot, even though it's a bear market, you can still get long. You can look at signal groups. You can come to my signal groups. We're not a scam. Yeah.
You're a dox. That's already a good sign, right?
Yeah. Here I am. We'll be honest with you. Who are better signal groups? I think there's Rose. Rose does a lot of pumps, so she's a Thai lady boy. I think Klondike are doing quite well at the moment with their scalpels. I think if you want to learn theory and stuff, you can pay for Kilmex. The Kilmex is like $400 a month. Yeah.
Oh yeah,
The rest of them, like Margin Whales is quite good. Those, and then the Haven's quite good. So I think if you're learning to trade, like go to the Haven. Those guys I think they genuinely care about you. So people like Loma, Krillin, they're all good guys. So I think that's probably the safest group. Is the Haven. Yeah. So invest in something like that, the Haven. I think. I mean, that's quite expensive, but I mean, it's not. If you
things are never cheap, right?
Yeah. And you got 4 traders there. Like Loma's amazing, man. Like his trades are really, really good. And they're nice, right? So he gives you 2 entries, and there's that, and he's honest when he gets stopped out. And then Krillin and Pierre, the French guys, are good with the macro. And then there's CBS, is the English guy, and he's good in a bear market. Yeah, those guys, I think, but definitely the Haven is a good option if you're starting.
Awesome. Yeah, for the audience, I will put the link to the group or to the website of the group into the description to that. And yeah, 2 or 1 last question. Basically, what would be or do you have any exciting or funny stories to share, basically, where maybe you made a minor mistake, or someone who did, or I don't know, whatever you want to tell?
Oh yeah. I can tell you about. Maybe you guys have come across CF. It's like Trader CF. It's like a
CF, no?
Yeah, TCA. Yeah, like if you guys are into like high leverage stuff, yeah. I think we worked with TCA originally, yeah, and yeah, this is where we got wrecked. His risk management is appalling, man. Like we had API access into his fund, and he was trading like 10 BTC on 20 grand or something. So like 100 ETH. Like, geez, man. We kind of suspended disbelief, and then he got like wiped out. And I just woke up one morning, and like it had gone from like it had 20 grand start a fund, and it was like at $300 or something else.
Wow.
That's pain. That was horrible. Yeah, but that was luckily it was in the bull market. Yeah, it would just started, and we think, oh, this is easy. We can give this guy some money. He's gonna make money. Yeah, don't give that guy any money.
Always the same.
Yeah, that was horrendous. Yeah. So that's probably my worst experience, man. Like the rest of it is just like, I don't know. Yeah, what was the worst thing? I also promoted Scarecrow, which was like a yield farm, and like, what did I? Like I thought it was a cool idea, and I was saying did YouTubes on it, and they weren't paying me for any of the stuff. It's just like, and then yeah, they're basically rugged. Yeah, so that was pretty awful. So I lost like 50 grand.
Oh gosh, that's
yeah. So I had like 10 grand left. Yeah, and I put that into like a pipe, and then everyone thinks you're in on them. So yeah, be careful where you put your name. Yeah, you just don't know. Yeah,
that's
you just don't
important.
know. Yeah, that was 50 grand of my own money, and it's like, yeah, easy come, easy go, man. It's like, yeah, that's why that also reinforces the point: don't go all in. Yeah, you don't know what's going to happen.
Definitely, yeah.
Yeah.
What comes fast goes fast, right?
Yeah, for sure. Yeah, when you have a win, it's good to kind of take it easy. Yeah, it's like the next few days usually suck. Yeah, that's what we find. Like we make a lot of money when it dumps, and then it's in shock mode and kind of does this, and it kind of bleeds a bit. Yeah, take your wins and solidify your wins and pack them away and process them, and then go back to it. Don't give it back.
Yeah, I think that's a common experience. I think you win and you lose afterwards directly because you're
Psychological.
agreed.
Like, do I deserve this 50 grand? Yes, 100%.
Yeah. Just don't lose it. Take care. Yeah. Awesome. So we heard a lot of things right now. Do you have, or you have, I think, 3 really short key takeaways for the audience where you say that. If you do that, you're fine to start out, and let's go.
Yeah, so initially go small with your risk and understand how risk works. Everyone's trying to mislead you on profit, particularly in leverage trading. Please go to our suppliers that we recommend, because there are lots of people just there for the subscription fee and they're not there to look after you. And then go easy on yourself. Don't get too emotionally involved in your trading. The more kind of divorced you can be from your trading, the better, and you can make rational decisions. That's incredibly important. That's for the ups and for the downs.
Awesome. Thank you.
Pleasure.
I said it was really a pleasure talking with you, and I think that's an incredible episode where people can get a lot of value out of it. And yeah, thank you for watching. Thank you for being here.
Thanks, Kevin.